here, my overview of the market. Um, we had tried out yesterday to trade above value area, the larger value area at 48, when the market had failed and pushed back in. It tried pushing out and couldn't stay out of the larger value area, and my trade was for the market to try and push itself to the other side. And not my trade, sorry, that's what we got that overnight and into the morning. So I want to extend out on yesterday. And as you can see, we are currently opened at value area low of the longer term here at 90. So we opened gap down out of range. This is value area low of yesterday. Value area low right here, 33. We opened below the closing balance, gapped down, and we've pushed, tested it, fell away, tested it a second time, and then fell away. And now we're currently trading in a 31 pip move, impulsive move down. So it's 7:13 on 8/24/2016. I have my hypos to build here. Market is relatively short. We have quite a bit of selling in this market, so I don't want to see the market get up over 13.16, this zone. If it's going to be a short day, the market is likely to get on top of that and run for the value area low, which is about 34, and we'll just continue to chop and balance here in between the value areas. So right now my 1 hour 7 to 8 o'clock balance is being formed. That helps me also define direction, because we are opening, in my opinion, we are opening extensively gapped down. I'll be looking for two things to take place. I'll be looking for a try for gap, a failure, a push back under that balance, and a continuation of a trend down. Likely, if we are going to continue downwards, I want to see the market stay out of 90. 90 is kind of the over-under area currently. If we get above 90 and protect it, I'll be looking long, and I will target 1301, and further targets will be 1308, which is the current value area high of today, and it seems like it's the mid of this balance, 1308, 1310, and I don't want to see the market get above 1311. If it does, I want to see it quickly test 1316 and fall back inside 1311 for a push down. So hypo 1 is the market finds a buyer, pushes the opening balance, and finds a seller at 1311, and or tries for 1316, tags it, gets back below 1311, starts walking its way down. Another test up there won't be too good for the sellers, so I really don't want to see price get back above the IB low here in 1301. Essentially, I want to be short, back into the balance. That's hypo 1. Hypo 2, I would say, market extends from its current location, which will be 1391, will be its launching point downwards. The market just can't get back in. It's trying and extends extensively lower. We put impulsive moves lower, which I will trade the pullbacks and look for a trend day down. That's hypo 2. I do want to be short today. I will look to be long if the market pushes back into the opening balance and can't get back at a 1301. We push down, push back up, and it just seems like it's not a selling day. I will be looking long, and I'll be targeting the closing balance and looking for prices to walk up. So those are my 3 hypos. What hypos do for me is they allow me to not feel surprised. I don't. So I trade my hypos, but I trade them with almost a grain of salt. It's just I need to be watching the action for me to actually be in the action. So hypos basically just give me understanding of how the market might react in certain situations. It's not to say that the market has to, because the market doesn't have to do anything. But what it's doing is it's telling me what could be possible, and I think that's essential when it comes to trading, because even when you're wrong and you're say scaling into a position, or you're into an area of where you want it to be short or looking long, you have the ability to suppress the current, I'm not going to say emotion, but suppress the current feeling that you're wrong. Whereas if I didn't build a hypo, I would find I'd have less confidence and more confusion about why the market's doing what it's doing. Whereas with the hypo, I feel more confident and less confused with what the market's trying to do, because I have an idea, a hypothetical situation can take place, and I won't freak out, and that has helped immensely with my trading. And it's also going to take me to the next level, I believe, because it's going to give me the benefit of a pre-planned play, essentially. And I will check back in with my final daily review on what takes place. So I am looking short. We are trading in an impulsive move down of 31 pips. So I am looking short. But if we break above here, 94, and start to support that, I have nothing really to lean on. I do want to look long here at 90, just for the initial pullback to see where the seller is. It seems if we do not hold this zone, the market's likely to touch it and push back into this zone. That will be ideal. I've seen that a lot. That's something that's most likely to happen. We have untraded space right here. So if the market does push back in, it's likely to push in and try its way up. But I don't want to see that. I want to see that the opening balance holds. I want to see it try in, fall out, and then I want to see it take off down, because I want to be short today. I won't hesitate to, yeah, no, it's a short day, unless we have a, look at this double bottom right here. So, we'll see. I'll check back in later with my review, and I can review any errors that I have and go over what took place. And I think that looks cool. It's breathing.